Well, hey, it's Dr. J, and today is Tuesday. And every Tuesday, we've got a chock-a-block Tuesdays now. We've got lots of things happening, but one of my favorite parts of the week is talking to Jackson Millan. Over the last, nearly 8 weeks now, he's been sharing with us, our tribe, some golden nuggets of actually creating wealth, but also having a lifestyle that gives us the freedom to have choices. Isn't that funny? Because that dovetails is exactly why we do the Sales Authority Club, is to give you the opportunities to make more money. But guess what? Jackson has made it really abundantly clear to me that if we work hard in making sales and market well, that's great because it gives you, let's say a success formula, makes you feel good, but it's never, ever going to make you wealthy to give you freedom. So we are the first catalyst to be able to do that, is to make sure you get conversion. But with that surplus and all those things that we work so hard for, we're only going to get the freedom if we have the wealth. And wealth has to be taught. And in all my days, I've only had one other person in my world that had spoke and actually had the strategies like Jackson. And unfortunately, he retired many years ago. And up until I met Jackson, I didn't trust anybody. So I'm really glad you guys are joining us today, because we're going to be talking about something that no one talks about. We're going down like last week, estate planning, but gee, wasn't that awesome? Why insurance is essential to wealth planning, because people say, oh, I don't want to pay insurance. It's a waste of money. So welcome, Jackson. Let's do a deep dive into the insurance area.
Yeah, looking forward to talking about it. Hopefully we don't put anyone to sleep. We know last week was our last fortnight was a little bit contentious, but if people got through the self-limiting beliefs they had around the estate planning, then they actually got a lot of value. So I'm hoping to do the same today.
It was absolutely incredible, Jackson, of the things. And I think everyone really appreciated you sharing your story, because the things that can go wrong, and sometimes where you're really not in a clear mind, you've got a strong network and being coached on what needs to be done, not someone just telling you, teaching you makes all the difference. And that's why I wanted to cover the area of insurance, because I want to find out, why is getting insurance so important to a wealth plan? Where does it fit in?
Yeah. And look, I don't like the word insurance, Steve. I don't think anyone does. No one gets out of bed in the morning and says, I'm going to go buy some insurance. Insurance is a vehicle. Like anything when it comes to our wealth and anything that is related to us working towards financial freedom, insurance is a vehicle to achieve a particular outcome, and that outcome is called risk management. Now, I'm very, very passionate about this, and this is in the same realm as the estate planning, because this is something that hits very close home to me. My old man, and I actually didn't realize this until I actually got into the financial advice industry, is that he was a financial advisor back in the late 80s, early 90s. And he worked for National Mutual and AMP. And when I got into the industry, it was, funnily enough, it was kind of like walking in his footsteps. And for years, I was always taught by my original mentors, make sure that you practice what you preach and you share your knowledge with the people that matter most to you. So one of the first things I did is I approached my dad and I said, Dad, I need to help you sort out your insurance. And he says, don't worry about it, Jack. I used to do what you did. I know what you know. It's all sorted. Don't worry about it. And I let him get away with it. And it's something that I've regretted ever since. He could swear on a stack of Bibles that he had his risk management strategy in place. And it wasn't until years later that he was unfortunately diagnosed with late stage stomach cancer, was given a very short timeline to live. And I said, Dad, let me commence your income protection claim. And he said, okay. He conceded defeat. He gave me the paperwork. And as soon as I looked at the paperwork and as soon as I read the first line, my heart sank. He had a policy that wasn't worth the paper it was written on. It was a credit card protection policy that gave him the lousy benefit of covering his minimum credit card repayments for a lousy 12 months. It was inferior and in no way, shape or form, any form of a risk management strategy. And as a result of his arrogance and inability to follow my advice, we were in severe financial hardship. And the responsibility of being able to pay the mortgage, provide for my household, be able to keep the family home, all fell on my shoulders. So this is just one example of thousands that I have of individuals that have overlooked the importance of having a risk management strategy because we're all 10 foot tall and bulletproof.
Gee, look, I love that shift from insurance to risk management, because if we mitigate our risk and protect ourselves and our loved ones, that gives us peace of mind to then use the money correctly. And I think it's such a really sad story, but it's a true story, and I really feel for you, mate. But you know what? Those stories, I'm sure it's going to resonate with a lot of people, and it's really generous of you to do that, mate.
And look, there's two types of situations, Steve, where people have an epiphany moment when it comes to risk management. And hopefully I'm going to add a third to it.
Yeah.
The first one is they have somebody close to them that something happens and they go, oh shit, I better get my insurance sorted. That's too close to home. Or,
yeah, it gets scary, doesn't it? So when it comes down to doing that, obviously that what happened with your pa, he picked the wrong insurance. So how can we make sure it's not the wrong insurance?
Let's talk big picture first.
How come if the risk management plan is correct or wrong, or if it's a wrong one? Because obviously that one was a weak risk management plan.
And this is where most people approach their risk management the wrong way. They approach risk management from a tactical standpoint based purely on cost. How much am I prepared to spend on my insurance? And normally that leads them to going and pursuing a really cheap and nasty policy because they've placed the objective, the destination, on the premium, which is not. Once again, a premium is just a byproduct of the peace of mind that premium gives you. So what we firstly need to define is what is it that we're actually trying to protect? Now, I've always said that you cannot make plans with your income unless you have done everything within your power to protect your ability to earn it. And we need to consider what we refer to as a wants analysis. What do you want to see happen in the event of the unforeseen? What are the things that matter most to you that you need to protect in the event of the wheels falling off? So there are really 4 key scenarios. In the event of your death, what do you want to see happen to your debt and to your income? So if you've got financial dependents, what would you like to see happen in their situation to ensure that they can maintain their quality of life? Number 2, what happens if you suffer a total and permanent disability? You have an illness or an injury which renders you unable or unlikely to ever work again. What do you want to see happen in that situation to your debt and to your lifestyle? 3, what happens if you suffer a critical illness like a cancer, a heart attack, a stroke, that may not necessarily have you off work forever, but may take you out of action for a considerable amount of time? How much breathing space would you like to have in the event of that situation to give you the ability, the freedom to choose to go back to work on your own terms? And lastly, in the event that you suffer any accident or illness, what do you want to see happen to your income? And how much of that income do you want to replace between 0 and 100%?
There are a lot of questions that people just don't ask themselves. And look, I've been in front of lots of accountants, a lot of financial planners. They just say, do you have life insurance? Do you get this? Do you have that? We'll put you onto that. They don't ask you the questions on, what do you want to happen? Or what matters most? Or, hey, if you had debt, what's going to happen to that? If you got income, where do you want it to go? No one asked those questions. And even last week, we were talking about the things that you do with your superannuation to make sure there was a beneficiary that was put in there. So with those 4 things in mind, I mean, what's the number one insurance that we need to, or risk management? What's the number one thing that we must do to start the ball rolling? Because I'm sure lots of people got a lot of little irons in the fire, like your dad had, was just a very ineffective risk management that just made your heart sink.
Correct. Well, first thing is you need to be prepared to have the hard conversation with yourself or somebody else. The simplest thing you can do is go grab a copy of my book. Enjoy the journey. I cover off in the foundations component of Plan B. There is a worksheet in here that basically takes you through those questions and allows you to understand how do you pack the right tools to ensure that you set the right foundation.
What chapter is that in, mate?
That is chapter 5.
Chapter 5. Well, that's a chock-a-block chapter, because the last one we were talking about was we did a bit of chapter 5 there too.
We did, yep. So that all
I
forms
must
part of
say,
our
guys,
foundation.
I've read the Barefoot Investor and those sort of thing, and I started to do Unleashed with Tony, but I then had to revert to the audio book, which I got through, which was I was just like popcorn. Jackson's book is outstanding. It's ahead of the game. It makes it understandable. Has lots of questions he asks you in it. So I've got the link there. I'll add it to the YouTube and also into the group. Guys,
Please do.
Please grab it. It is gold.
Now, once you've done that, it's a matter of then finding yourself the right risk specialist who can assist you. Now, here is the thing. And we spoke about previously that the financial services industry in Australia and across the world has been purposely made to be complex. And I think that that's been done to make sure, well, really for two reasons. One, it makes sure that people don't go out and do silly things without having the right guidance. They need the help of a trusted professional who understands these things. And secondly, it creates a reliance on having to use those professionals. So there's some good things and there's some bad things. I want to ensure that you guys enable yourself through education. This is objective education. This is not pursuing our own agenda. The aim is about understanding and having the tools in your kit bag that helps you make informed and educated decisions, not just outsourcing these decisions to a third party. But it is important that you find yourself a risk specialist, somebody who understands insurance and understands how to translate your wants analysis into the appropriate products and levels of cover and structure to ensure that you cover your bases. Because what many people do is they're sitting at home watching the telly and they see an ad flash across the TV with, hey, get your insurance covered over the phone. And those policies are vastly inferior to policies that you can get by going through a specialist risk advisor. In actual fact,
I've heard you say this a couple of times, Jackson. Now, last week, we talked about getting in front of a certain type of lawyer.
yes.
It was like an estate planning lawyer that was a specialist. Now, you actually have got these people inside your inner circle, so if you can put them in the right direction. Because we're going to go to Google and type it in, and is this the right guy? So I think it's really important that we come under an umbrella of someone you know, like, and trust. And obviously, you're that person for me, or my mentor in this area. But they need to go into that area. Does this apply for the risk management specialists as
100%.
well? Is
correct.
do you have people underneath the umbrella that you have vetted to make sure they're the right people?
Exactly. So we've got people in our team that can help you with this. And what we normally do is we'll help facilitate the wants analysis for you. We have software that then allows us to crunch the numbers to translate your goals and objectives in the event of your plan B, of what that would translate in terms of the levels of cover. What we then do is we use a comparison software that compares all of the insurance companies around Australia based on your goals and objectives, your unique situation, and then compares them side by side to be able to help you choose the right policy, the right levels of cover, and the right structures to ensure that you have peace of mind and certainty around the event of the unforeseen.
It's not just having the insurance and paying a little bit of money. It's say, hang on a tick, what's the purpose of the insurance to make sure that we get the outcome we require? So that's a big deal.
Let me give you an example, guys. Many of you would have an industry superannuation fund, Host Plus, an Australian Super, one of these types of providers. Now, those providers provide insurance, but their insurance is on average 50 to 60% less comprehensive than other policies that are available on the market. I'll give you an example of this. I had a client many years ago whose husband passed away. Very straightforward, cut and dry situation. There was no funny business, very, very straightforward. Now, he had an industry fund. I'm not going to name the industry fund, but we tried to process a life insurance claim and it took them 2 years to pay out the benefit. 2 years. Now imagine, and this lady was very lucky, they were quite wealthy independently, but imagine that they weren't. Question to you guys, do you think that your family could go 2 years without the insurance that you'd set up to be able to manage the risks that would affect them? And I think that there'd be very few people who could say confidently yes. In contrast, other providers that we work with that offer comprehensive levels of cover, which in actual fact, in some cases be the same price and even cheaper than the industry funds, pay out within 72 hours.
Gee whiz, that. So it's absolutely critical to have these experts. Sure, we talk about money and so forth, but there are so many different nuances that if you don't know, you don't know.
Correct.
And how can you ask the question?
Exactly. And I think this comes back to, as salespeople, it is your role to implement inking, right? How often do you ink with your clients? How often do your prospects not understand the nuances of your wheelhouse, of your area of expertise? And how often would those prospects be able to make an informed and educated decision without you? The same applies for your personal insurance. There are so many small nuances and inks that you don't know and you couldn't possibly know. Like, when was the last time you bought maybe a car insurance policy and you received a PDS that was about this thick? Have you ever read it? No. And we pay a lot of money to get software to not have to read it, so we can actually summarize all of the features and benefits and compare them side by side to be able to give you the right advice to make sure that you don't get caught out by a technicality that could result in you or your family not getting the money that you deserve.
So what are the three insurances that people should start with? Now, there's so many different types. There's car insurance and so forth, but let's put that aside. Yeah. Or it might be part of the top three. What are the top three that people need to sort of get that gauge and have a look at their circumstances? But what are the three insurances or risk management strategies they need to be in place?
Look, I'm a big believer that you should have as much insurance as you can comfortably afford. And here's the thing. None of us are Nostradamus. We don't know what the future holds. So if we're trying to pick and choose what insurances we should take, we're always having some sort of guess, right? Because we don't know what the future is going to have. But you got to realize, where do the biggest financial implications and setbacks lie for you? Like, think about it. What's your car worth? 20 grand, 30 grand, 50 grand, even 100 grand. If you crashed your car and wrote it off, the maximum impact of that vehicle is 100 grand, or maybe damages to another car, maybe 200 grand. Maybe you're really unlucky and you run into a Lamborghini, 300 grand of damage. But what is the long-term impact of you losing your ability to earn an income between now and retirement? Let's assume that you earn $100,000 a year conservatively. And let's assume that you've got another 30 years of working life ahead of you. That's a minimum of $3 million of opportunity lost. So your number one asset is your ability to earn an income. My view would be to have the four main pillars, have some form. It's better to have some form of protection than have nothing at all. Of protecting your ability to earn an income, ensuring that you're protected in the event of a critical illness or a traumatic event like a cancer, a heart attack, a stroke. And just because you're young doesn't necessarily mean that you don't have risk of this. I have another really close scenario that happens is my business partner, Sam. Sam and I have worked together for the last 5 or so years. And when we first started working together, I said, Sam, let me review your protection. I don't have any protection. I'm Italian. Italians don't get sick. I'll be all right. Never listened to me. It took me years. His wife eventually fell pregnant. And I said, Sam and Elise, you need to listen to me. It's not about you anymore. It's about your soon to be born baby. Let's sort out your protection. He conceded defeat. He goes, all right, Jackson, I'm going to let you do it. Okay. We put in his risk management strategy, and literally 3 months later, Sam was diagnosed with a intestinal condition called diverticulitis. He was in hospital, nearly died. He will have a lifelong condition moving forwards that had gone under the surface for his entire life, never had a sick day. And if we didn't have those policies in force prior to that, he would have been excluded for diverticulitis after the fact, which was the one thing that was most likely to rear its ugly head. So now Sam has complete peace of mind to know that not only him, but his family is protected in the event that that does escalate again. Now imagine having that hanging over your head without that protection.
That's actually quite a scary thing to think about, where if you've got other people, it's really important. But also, if you haven't got a family and you don't have to think about your wife or your kids,
sure,
what happened to you and you had to move out of your house, or you had to then go back and back with mum and dad, and they might be elderly and can't look after you, and
Exactly.
lots of those sorts of things. People say, "Oh, he's talking about kids and stuff," but I'm a young buck, or I'm a single. Well, the unthinkable does happen. So, is that type of insurance, is that called? And I might be wrong here, and more than likely am. Is it called main man insurance?
Yeah, so we basically want to make sure that in that particular scenario, we cover the things that are going to have the biggest impact for you. So yes, it's about what's in it for me, right? And to give you guys some context, I took out my first risk management strategy when I was 19 years old. And here's the thing, guys, there are some mechanisms in place that actually allow you to freeze your premiums going up for the life of your policy until you turn 65, which is a mechanism that's called level premiums. Now, most people associate insurance as going up as you get older, right? As you get older, it gets more expensive until a point that it becomes completely unaffordable. Whereas the insurance companies want to keep you as a client long-term. So many of the premium insurance providers have a mechanism that's called level premiums, which it works at about 30 to 40% more expensive in year one. The crossover point is about 9 years. So if you're going to be holding your risk management strategy long-term, then you will save tens of thousands, in some cases, hundreds of thousands of dollars in premiums. So when I turned 19, I did the numbers on it and I go, wow, this is amazing. I can lock it in at this really low rate. And it's a bit more expensive than the stepped version, but the crossover point in 9 years' time, from there, I'm going to save thousands, tens of thousands. So because I had the knowledge, I had a forward-facing plan, I implemented the steps, I was able to not only have a cost-effective risk management strategy, but one that's not going to come back and bite me in the bum as I get older and it becomes unaffordable.
Now, what is that called again? So having that that special insurance, and that's a little bit more expensive now, but as we go past the threshold for 9 years, it then saves you thousands, and in some cases, tens of thousands of dollars. What's it called?
It's called level premiums.
Level premiums, gee whiz. So should all of us have a risk management policy or insurance on our superannuation?
Well, here's the thing. First things first, to answer the first part of your question, should all of us have a risk management strategy? Yes. Does it have to be insurance? No. One of the key things that we look at for our clients is how do we help you self-insure? Because there comes a point in time whereby you can amass enough wealth and mitigate enough risk where you actually don't need to hold insurance anymore. I've got many clients who've been able to get to that point whereby they've been able to forego all insurance completely because they have enough wealth, enough passive income to be able to not have to have it. But if you do need to have it, then there are different ways to structure it. And there are some policies that you can have inside superannuation. Now, I cover this also in my book, in a side-by-side comparison of explaining the pros and cons between inside and outside super. And it is very important that you get advice around this. For example, for your total and permanent disability, inside super, you can only have what's called an any occupation. What that basically means is that for you to make a claim, if you are totally and permanently disabled, you need to be unable to do any job that you've had experience, training, or education to perform. Now, if you've only ever done one job in your entire life, that's not a problem. But like many of us, we've had lots of different careers. We've done lots of different things. We may have even waited tables while we were studying or at university. So in that particular scenario, a doctor is going to say, okay, Steve, you've had this laundry list of long occupations or careers over the course of your lifetime. I think you could probably still go back and do that thing you did when you were 19. Deny a claim. But there are some sneaky ways that as risk specialists, we can help you structure your cover to get the best of both worlds. And on the flip side being having an own occupation policy that covers you against the job that you're doing right now. So in the event that you do have a claim, and even if you can go back to work doing something else, you get retrained, you do something, you can still get that payout.
See, this it's a different way of looking at this insurance component, and we flipped it onto risk management. And there are other ways that you need to be advised on, and the layman doesn't know that. So, what's the next step here? Now we're going to be sharing the link for the book, which is really generous of you. But how can someone actually get in contact with yourself or one of the team members to maybe just look at their risk management strategy to start with, because, sure, they might want to make some money, but let's safeguard what we have now. What should they do?
Yep. So the main thing would be on that link that you're going to have, you can book a game plan session. Now, we don't want to talk about just your plan B. We may as well talk about plan A as well. Let's work out, what are you working towards? What are you trying to achieve? And that will actually make it a whole lot easier for us to work out, what do we need to protect against and how do we give you peace of mind? Because ultimately, our plan B is about making sure that we can still stick or steer back onto our plan A in the event that things don't go to plan. We'll normally spend an hour with one of our scale specialists or wealth coaches talking through what you're trying to achieve, what's getting in the way, review what you've got, and then provide you with a series of options, essentially give you an action plan for you to be able to use, to be able to take the next logical step for you to be able to achieve your goals and have peace of mind and certainty. Because keep in mind, guys, we never make good decisions out of fear. And the power of protection and your power of your risk management strategy is it allows you to make confident and forward-facing decisions, knowing that you've got a solid foundation that you can fall back on.
Yeah, absolutely. Look, I think it's really good that we've put it into perspective. Creating wealth in your plan A and saying, what are we going to progressively reduce our debt and move forward and creating wealth in lots of different ways with those buckets we spoke about a few weeks back. And then we're now looking at, well, where does this risk management fit in? Because it definitely has to be a big cog, because we work so hard to then get the advice to become wealthy. And then if we don't have something that's, I think you called it as protection, it's all going to go asunder. So thanks so much for all of that. Absolute gold as usual. I will put the links in to the group. Guys, I want to make sure you take some action. So please get in there and download the book, reach out and ask Jackson and his team for some advice and do a plan A and a plan B. So thanks again, my friend. Outstanding and really generous of, let's say, knowledge, but also those nuances that make a big difference that people just don't know what they don't know. You're a master. Thanks, my friend.
Happy to help, mate.
All right, guys. Isn't it incredible when you talk to an expert and who knows what they're talking about? They don't have to think too hard. It's what they do, is what is in their DNA that makes all the difference. Reach out. Have a chat with Jackson, get his book, go to chapter 5 seems to be something that's a big rock. Make sure you take lots of notes and take some massive action. Now is the time to take action, not next week. Procrastination is the thief of opportunity and time. All right, gang, we'll talk to you soon. Bye for now.